Thank you I know this is one of the last sessions, so I will be also throwing to a lot of participation from the audience, just to keep things exciting at least. So, Uberisation. One of the things, and we're changing gears a little bit here because I know we've been speaking a lot today about technical innovations and technology and how it can enable behavioural change and productivity and safety changes in our industry. And one of the things we're going to be talking about this afternoon is really exploring how can we use innovation in terms of business models to also drive that change in our industry. And you know, if you think about what was one of the things that Uber did, is not only did they take a technology and use that to their advantage, but also change the business model in terms of how do we actually provide transportation services? How does that capital function within society? Very similar to what Airbnb has done in terms of the hotel industry. So one of the things we're going to explore is, just as we're trying to change a lot of our industry with technical innovations, with social innovations, are there these opportunities for business model innovations either being created out of some of the technologies that we're implementing or just of their own right as society changes and we have social changes. So one of the first questions, I know certainly in Canada there's been a lot of discussion recently about how it's very, very hard, much more challenging than it has been previously, to get funding for especially junior exploration organisations, companies. And in fact, a number of them have come off the TSX and gone on to the CSE, so the Canada Securities Exchanges. I know the problem hasn't been quite so intense here in Australia, but still challenges to get that sort of initial funding. So what are some of the things, Jonathan, I know you've been very involved in this sort of area. What are some of the changes that you've seen and then the responses that your organisation has had to this difficulty?
Yeah, I guess when we went on our funding trail, the immediate competition for venture capital was really against the cryptocurrency market. The cannabinoids were just starting to appear in North America.
Yeah.
So we went on an investor tour through Asia, Singapore, Hong Kong, Seoul, and you just couldn't get an audience. Everything was crypto this, crypto that, and it was a vacuum sucking all the air out of the room. It's like, okay, I've got a really interesting play here, guys. Crickets. So on the other side of it there was venture capital available in the mining sector if you had the right commodity. At that time it was lithium.
Yep.
Very much so. And we couldn't actually say that. So, we might have it there. We've got a huge land package, but no one's looked for lithium. But we can't really go around saying we've got it. So conventional capital markets were closed off for us. Alternative investment markets, sort of in general, venture capital, no, they were looking elsewhere, not in the mining industry at all. Fortuitously, serendipitously, Australia legalised crowdfunding right by the time that we're coming along, going through this process, going, here's something new, something that hasn't been tried. So we give it a go. So yeah, why not? Adversity leads to innovation, or certainly experiments. So we jumped on the crowdfunding wagon, and we hold the flag for being the first exploration company to go through that process.
Okay, and what were some of the challenges? Because with every new innovation, there's always, as we spoke about earlier this morning, pain points are taken away and pain points are added. So what were some of the challenges that you guys faced with using crowdfunding as a method?
No one knew what they were doing. And I say with all due respect. So ASIC wanted to encourage crowdfunding, but ASIC has a really heavy tool to wield, the Corporations Act. And startups just don't have that legal knowledge or market operations knowledge to comprehend that. So ASIC was in a difficult place. So how much leniency do we apply to the crowdfunding startups? We want them to be there, but they still have to do things by the book. But where are the exemptions? The exemptions weren't there. So that was a challenge. We put something out there. Will that be okay for some crowdfunders? That was okay. For others, it didn't seem to be okay. So there wasn't a lot of consistency. Crowdfunding, you actually have to go through a platform. There needs to be a financial services license, so they take the overall responsibility, a bit like the ASX would through the IPO process. And they hadn't really done that before either. So everyone was learning. It's also a learning for us to go, well, how do we pitch to mums and dads in a crowdfunding scenario? It's not really a market that typically associated with sophisticated high net worths where you've got cornerstones. This is really grassroots funding. So we had to learn how to pitch. So it would be interesting to participate in our last night's pitch battle. So as part of the regulations, you actually have to put a 3-minute YouTube pitch video together. Okay. So we did that organically, we did that in-house, and it was a hell of a lot of fun, and we learned a lot along the way.
Yeah, absolutely. So if I summarise that, one of the key challenges, or a couple of the key challenges you guys faced was really not only the legislation and how to interpret the legislation, because you were some of the first to go in and do those sort of things, but also develop the skill sets that were required to sort of make that business model or process now work really efficiently and effectively.
That's right.
Yeah.
Yep.
Yeah. So it's interesting in that sense. It's not too dissimilar to a technology innovation, but you're innovating in a different way. And Allan, I know when we were speaking before, you were talking about the fact that you'd spent some time not only thinking about, but in fact in some cases engaging with interesting business models throughout other parts of the mining sort of life cycle. Tell us about some of those sort of things.
Yeah. Well, thanks, Michelle. I think we've used the term Uberisation as a sort of a session theme. But I suppose historically, the sort of the mining predecessor to Uberisation was the sort of mineral royalties business model, and that was, and obviously Franco-Nevada being one of the leaders in that field. And when you look at the total shareholder returns on Franco-Nevada, it's outperformed all the mining companies over decades.
Tell me about it. They rub it in all the time.
And traditional miners sort of say, well, this is cheating. You're not mining anything.
You're going to start talking about ETFs fairly soon as well,
equivalent to the Uber not sort of owning the cars and Airbnb not owning that the mineral royalties companies didn't own the mines and did very well. So I think that we shouldn't beat ourselves up too much as a mining industry to say we're behind. We have a fantastic historical precedent in the mineral royalties space. I think going forward, the opportunity is to say, what are the new Franco-Nevada type business models looking forward? And I think that the challenge for us is that because we're an asset heavy sector, we tend to focus on companies and look through them into their assets, rather than, as John's just alluded to, focus on their actual capabilities and the learnings that the companies are having. So I think the challenge I'd put out there is there somewhere in the future, perhaps along the lines that we've just heard, is there a socially conscious mining leader that will become recognised for its capabilities in operating mines that other companies would not even be allowed to permit, as one example. Another one, is there genuinely a best-in-class operator out there, or are all the diversified miners or all the large gold companies on a roughly level playing field in terms of operational capability? So I think one challenge for us is to say, can we look beyond the asset? Can people stand out in terms of their business model, in terms of what they choose to do and what they don't choose to do? So certain companies will not build greenfield projects. Certain companies are very good at buying, inverted commas, tired assets and operating them more efficiently than peers. And I think that showcasing and bringing to the surface these models, in the process differentiating the offerings to investors, I would like to think is where the industry will go, rather than us all being fairly similar black boxes that are valued on the basis of the grade of the iron ore in the deposit and then the size of the tonnage, etc., as one example.
Yeah, and I know recently there's been a lot of conversation about, or at least it's starting to be a lot of conversation about millennials and their impacts, both in terms of the workforce that we might like to have in mining, and how does that workforce then change the way that we should go about mining to be attractive to that new workforce. But the two that haven't had as much airing, and I remember John actually yesterday spoke a little bit about the first one, which is millennials as investors. And what sort of investments are millennials going to want to invest in? And, I note, I think there was recently an article that came out suggesting that around about 2020 to 2022, millennials will actually become one of the biggest investor groups, both as money starts coming from their parents to themselves, but also as they start, creating investments and wealth themselves. And so, I think there is a lot of interest around, well, how will millennials start placing their money? Will it be in mining? And if it is in mining, will they behave more like impact investors? Or, will there be other ways for them to be placing and thinking about how they place their money? And then the third component, which is sort of also quite interesting, and I was speaking recently to a politician in Nevada, and Nevada in 2019, so this year, will actually become, the biggest voting group will be millennials. And so, starting to change the way Nevadan politicians think about, energy development and other things. So, what do you think about how the different ways that people will invest will start then changing, mining and changing the business models that we should be starting to think about?
Well, if we can get the messaging right, I think it's a great pool to tap into. The millennial investors at the moment are extremely risk tolerant. They love their cryptos and all that sort of thing. They'll happily take punts everywhere. Is that because they're inherently risky? Maybe. I don't think so. Real estate, owning an own home, that's an aspirational goal that a lot of them are giving up now. So they've got dual incomes, no kids, high disposable income. So what do? Oh, well, I'll put 10,000 here, 10,000 there. Do it over that an entire generation, and that's a serious force to be dealt with. So it really is, but if you can communicate and connect with them and touching on that ethical, social expectation of them, which is huge, that's going to be a major driving force. And a lot of that will go to speculation and innovation and doing something different.
Yeah. Allan?
One small area that popped into mind is I'm very fortunate to have a PhD student at the present time working on emissions intensities out of mines, and particularly looking at the gold sector. And the gold sector is nice because there's lots of mines in the gold sector, so N can be quite high. So roughly in Australia, reporting gold mines, about 65 gold mines reporting in Australia, in terms of both intensity of emissions and obviously, of course, now all-in sustaining costs. So you can do the proverbial management consultants 2x2 matrix, and you can, in fact, we didn't want to offend anybody, so we made it a 3x3 because we didn't want to leave anybody just on the wrong side of the line. But the reason that we did that, you can now generate a 65-point energy emissions cost curve for the Australian gold industry, and you can then cross-correlate that with the AISC outcomes from the Australian gold industry. And the hypothesis behind that is, and perhaps it's linked to the millennials, is the concept that right now we're not seeing a great deal of evidence of people choosing their investments, say in gold, based on where you are on an emissions intensity versus cost intensity chart. We're preparing all of that work, and at some point, we've talked about ethical investments for 20 years and green investments for 20 years. At some point, there'll be a tipping point, and maybe it comes with the millennials, whereby those data will be very important. And the data are available, but not easily published in the Financial Review every day. And perhaps the millennial investor may demand that, I think, is one example.
Yeah, no, absolutely. I mean, I know one of the interesting sort of thought experiments we had when we were doing some work recently with different mining companies was around, how do you unlock some of those projects that have been, locked up for all sorts of different reasons. It might be a technical reason, it could be a commercial reason. And I remember speaking to a group of young people out of San Francisco who had just actually created asset tokens. So they were using a blockchain to create asset tokens, to tokenise art, to tokenise, other assets, housing and other things. And one of the ideas that they came up with was, maybe you could take a project you could tokenise it, and especially if the project has, relatively zero value on the books of a larger company, divest some of those on a token exchange, release some information about what was sticking that project, so things we'd thought about in terms of technology, areas where maybe there was community concerns, areas where maybe there were governmental concerns, or whatever those issues might be. And then in so doing, incentivise or encourage people to come and solve some of those problems, because in solving those problems, the value of those asset tokens would increase. And so their hypothesis was this might be a way to unstick these projects, essentially incentivise innovation rather than having to sort of constantly pay or have risky innovation. And also to try to engage more ownership, local ownership, in some of these projects and assets. But one of the sticking points for that particular idea was the fact that currently these token exchanges don't necessarily work, and that some of the they're limited. And some of the information that one might have to receive would certainly be outside of the guidelines of the sorts of information that we could currently issue as organisations. But it was just an interesting business model that they were sort of presenting or considering. But are there any other sort of ways of thinking about how we unstick some of these projects or some of the assets that we currently have in mining? And engaging some of the potential solutions that have been considered.
Yeah, okay. I guess what I reflect on is the scale of our project. We've got a licence area about the same size as Northern Ireland, so just under 13,000 square kilometres. And it's awesome because it's a blank sheet. So the opportunity there was go in, be first mover, don't do mass scale geophysics because there's nothing, no government survey, zilch. Cool. Easy wins. Problem? Too much data for a little junior, a small company to handle. It's like, all right, we could try and pay a consultant to deal with that masses of data. A bit like your tokenization. It's like, well, all right, let's decentralize it. And it's very much the crowdsourcing sort of solution. Oz Minerals doing it at the moment. Just put $1 million out there. Go, get lots of opinions. Half of them will tell you what you already know. There'll be a few crazy ones, but then there'll be some genuine insights. So the way I think about it is you harness the crowd, and at the back end, that's where you throw your AI in. So you're not leveraging too much on the other side of the equation, but by doing that, you can actually replicate or at least compete with what, say, an in-house geological team would be doing in a major company. So it's like, okay, how can a small company hit hard with big data? And it has to be by externalising.
Okay, so it still have that same impact that a larger organisation would have, but do it in a way that de-risks some of the costs associated with it or minimises some of the costs associated with it.
Yeah, that's right. And it's really just investing in the information that you've already got.
Yep.
So it's really milking it. You can rely on one consultant's opinion, that's cool, but if they've got it wrong, because it is an opinion, and that doesn't, there's a huge opportunity cost.
Yeah. Alan?
Big subject in terms of new business models.
Yeah.
I love the thinking around the token and the exchange. And I think as a generality, I say these days I live vicariously through my PhD students, so I should give a plug to John Sykes, who's just finishing his PhD in scenarios for the future of mining, but both technical but also around business models and the like. And John's won a couple of a best paper and a medal, and I jokingly say, for making up stories about the future. So hopefully he gets his PhD about it. But some of the conceptual sort of business models that were dreamt up in that process. So we put about 60 people from diverse backgrounds in a room, got the gender diversity as best we could correct, found the almost political diversity correct. So we brought environmental groups into there, engineers, geologists, metallurgists as well. So we did the traditional sort of disciplines. And we tried to, interestingly, when you do scenario planning like that, what the outcomes tend to be a little bit seeded in a recency sort of bias. So if there's something been talking about Brexit, for example, you get a lot of stuff around political dimensions and divides in the world and accessibility to certain blocks of land and stuff of that nature. But some of the ideas that came up, we would hope would have potential futures, others may be just off the wall. So there were a couple, not unlike you described. We conceived a thing called an in-ground gold unit, which was a tradable gold unit in a natural vault in the ground. Never actually gets mined, and people actually sort of trade in and out of these positions, so zero greenhouse. Almost sounds like something off a Rob Sitch type, ABC type TV show, but potentially was one concept. Around about the time Venezuela came up with the same concept for their oil in the ground, I'm not sure I'd be buying units of oil in the ground in Venezuela that would never come out of the ground, but that was sort of one concept. But you look at it at three different dimensions. So we looked at the sort of technical innovation space. We tried to look at financial engineering innovation space, and then also into sort of separated that from commercial and business model innovation space. And I think when you go through things systematically like that, you do get a lot of concepts fall out. And then the term in scenario planning is you wind tunnel those through potential futures, and see what's robust and what actually is exposed to being problematic in possible futures. We did it for the top 50 copper projects in the world, and it's very hard to find a set of the current copper projects are either large, low-grade porphyries declining in grade, or deep underground, 2 kilometre down, difficult technical solution things, and very few of these copper assets survive in some of the potentially predicted futures. So it's difficult. I think a little bit like John's experience, that serendipity will play a role, and people will quite quickly latch on to something that works. So when the first in-ground gold unit happens, I think you'll have 20 or 30 of these things, a little bit like cannabis-type companies in Canada. Suddenly there'll be a big wave of them.
Yeah.
So we're not quite sure what it will be until we see it, but there are ways to sort of position portfolios to be exposed to more of these opportunities than less. And what fell out of that was that most of the miners are betting on the same part of the roulette table, so to speak, at the moment, inadvertently, if I can mix metaphors a bit there.
Yeah, and I think one of the interesting things about doing some of that scenario planning and thinking through what might be successful or work in the future is that certain countries, certain companies, certain skills show up as having a competitive advantage, and then you can at least start thinking about whether those are the sorts of things you want to build. So one of the things that comes to mind, even with gold in the ground and traded, vaulted in the ground rather than vaulted in a vault, is it does give Australia and Canada, I think, a competitive advantage because of the JORC guidelines and NE 34101, which gives people some confidence that those units potentially might be both stable governments, both with Indigenous communities that potentially have some role to play in terms of protection of the land, and certainly when it comes to Canada, also some disagreements around environmental impacts and those sorts of things that may help that idea become more of a reality. And so I think it's interesting to think through, when you identify some of those.
With the winners and losers, and no artisanal miners in Australia and Canada, et cetera, et cetera. So absolutely. And I think that's one of the other interesting things with some of these new business models that we're starting to see. So whether that is, power by the hour coming out of Boeing, and I know GE's started doing some of that sort of work, or whether we, software as a service that we're starting to see. But different sort of business models come out of different technologies, and it does always make me wonder, as we start automating our mines, and especially as we start going to further and further automation, we start using robotics for some maintenance, and if we could get to the point where we have 0 people underground, 0 people at the face, now maybe they're working elsewhere and they're doing other work to sort of coordinate the mine's activities. But you do start to wonder then, I think, whether mining companies are the best natural participants in that part of the process, because it really then becomes an asset management skill set and an asset management process, whether OEMs or whether other organisations are actually better at doing that function. And I think, once you start imagining that, you start going, well, what does that then leave
for the role of a mining company. You know, are we really great at exploration? In which case, would you start betting your money on really better and better AI, machine learning and techniques for better exploration and funding of exploration? Are we really good at processing or extraction of those minerals? And then, you know, again, would you start building capability in there? And I think for me, that's one of the really advantages of thinking about these different business models and what potentially could happen, because you start thinking about, well, where would we place currently some of our resources, some of our thinking, build those capabilities.
I think a great example there is LGS Minerals. They're a royalty company these days, but they're really a project generator, an incubator. Yeah. They explore. They've got their royalties coming in, so they're probably one of the few companies in the world that do what everyone says, and that's counter-cyclical investment. Yeah. So when everyone else is dropping their licenses, they're picking them up, they're doing work, so they can see through it. Yeah. Their share price, a bit like Franco-Nevada, really stable. Yep. Really small team, they do one thing and they do one thing really good, and that's explore, and that's might be the way forward. As you know, mines do become more automated, we do specialise into one area. Maybe it's the processing, maybe it's the exploration.
Yeah, and you know, it's an interesting model in terms of using the royalties to then actually do exploration and reinvest in that sort of growth. It's
organic, it's wonderful.
Interesting.
If I can build on that, John, I was fortunate enough to see an Altius presentation, a Canadian listed, and they put an acid test on explorers. So we've got roughly on the ASX 750 or so junior explorers. I'm lucky enough to be on the board of a small number of them, 4. I'm not sure we always pass the test. So their test was to say, if you claim to be a project generator, the real test is that you have to be willing always to sell your best project or joint venture out your best project, whereas probably 100 of those 750 companies would say, look, well, we're a project generator, but they only really want to sell on the project they don't like that much, and they want to keep the ones that they actually like the most, so they don't pass the test.
Discipline's really key in that model.
Altius are good to their business model, and so that great example, John.
Yeah, no, I've spoken to a few of those companies that we are prospect generators. Cool. What went wrong? Oh, well, we drilled our best project. Well, that kind of the whole portfolio theory behind the business is that you have enough of those and you don't go to that point. So it's really hard. You know, oh, wow, that's a great big booming anomaly. Let's go alone. So, no, you have to give something up if you want that safety blanket.
Yeah. Well, I mean, that's was a Porter used to always say, or still says, that strategy is as much about what you don't do as what you do.
Absolutely.
And if you really want to be successful. Now, I'm just going to throw to the audience, because I'm sure that you guys have got some questions as well. Anyone got any questions for the panel? Yeah.
Hey guys, Brent from MineArc Systems. There was a theme yesterday around the consumer not really joining the dots between componentry in their phone and then where it came from and the importance of the mining sector. Do you think it can go another step further where componentry or raw materials that are sourced from mines that are ethical and safe and don't have child labour are seen as a higher value product compared to ones that are not?
Yeah, I'll answer from one perspective, from a mining perspective, but you know, one of the things I think we have started seeing is push down from some consumer organisations into mining and wanting to understand more where things are coming from. So, you know, currently I'm on the advisory board of MineSpider, which they do use blockchain to do provenance tracking, and with the intention of companies like Nike and Apple, etc., wanting to know where are their products coming from, and that's a purely response from consumers wanting to know, well, where does the gold come from, where does the iron ore come from, etc. And now with technology like blockchain, you can make that very transparent. I think one of the really exciting things about that is, though, you can make lots of things transparent. You can make, you know, how much CO2 went into producing that gold particle, how much community investment has gone into doing that, you know, how much cyanide or no cyanide. So it does then allow you to niche, potentially niche products. Now, whether niching drives additional funding or, additional price for those, I think that's yet to sort of play its way out, because there's two schools of thought in that, in terms of, will the pie get bigger or will the pie get smaller? So, one school of thought is to say, well, it'll become table stakes, that you do, certain minimum things and then everything else gets discounted. And then the other school of thought is that, things will stay at its normative price and you get a niching or an increased price. But look, what we are definitely seeing is pushed down by some of those organisations. Even to the point of, Apple, you've seen them do joint ventures with Rio Tinto around green or carbon neutral aluminium. I mean, whoever would have thought 10 years ago that anyone would be talking about carbon neutral aluminium? Pushing down into recycling, and genuinely trying to drive some of that sort of circular economy. So I think you are starting to see some really interesting business models pushed down because of technology that makes some of that transparency much more possible.
Yeah, I think cobalt's a great case study for that as well, Brent. A lot of cobalt comes out of coltan, which is extremely unethical in a lot of cases. But you see large manufacturers, Volkswagen, you name it, they've been actively looking at the upstream supply chains because they do, they've got a reputation to clean up, so they're hyperactive on this. So what that niche will play out like, we don't know. It just might be a case of if you can't prove provenance, you might have a hard time marketing your product.
The circular economy and the recycling actually reminds me, and Michelle will know which example I'm going to use at the present time. It's the example of cesium. So that I'm fortunate enough to be on the board of a company that's just mined Australia's first cesium mine. Unfortunately, it was a very small one, so it was all over in about the opening ceremony and the closing ceremony were about within a week of each other. But no, seriously, we mined the thing in about 4 months. The cesium formate industry is used in deep oil and gas, high temperature, high pressure wells. And it's a classic example of a circular economy chemical leasing business model. So it's like a hire car model. So Cabot Specialty Fluids, that currently own the business, basically rent the chemical to the drilling company. The drilling company pays by the day for having it sat on the drill rig, pays when it uses it, pays to get it cleaned up like you'd pay for a hire car, pays for anything you lose down the hole. So it's a beautiful example of mining companies don't always have to be lowest cost producer wins. It's this case of the recycling, they've really tied up EBITDA margins 50, 60%. So I sort of quite like that example. So high value chemicals lend themselves to that, but I think that I was reading in the Financial Review today and there was by chance, Brambles were in there talking about their CHEP pallets, right? So who would have thought that something as humble as a wooden pallet could actually have a business model associated with it, which is like a hire car that basically Brambles being a logistics business and they actually own things that while they're sat in your yard not doing very much, you're actually paying for them. So I think that shows a nice little example of business model innovation in CHEP pallets. If you can do it with wooden pallets, we must be able to do it with commodities in some way, shape or form. Yeah. And cesium's a wonderful little example that by serendipity we happened to find when we were looking for lithium. So I just wish we'd found a little bit more of it.
And I mean, aligned with that, we're starting to see, interestingly enough, some business models appear in terms of battery electric vehicles. One of the most expensive thing with a battery electric vehicle is actually the battery, because effectively you're almost buying a big chunk of the fuel source up front, rather than diesel we buy sort of as we go. And so, is it better to lease that battery and pay as you would with diesel over a period of time, and then the battery organisations or companies actually then take that battery back, recycle, reevaluate it and create that sort of circular economy. So, we're starting to see some of those sort of business models appear as well. And then, one of the business models I find that's really interesting aligned with that is there's a group currently using blockchain to try to get provenance tracking, and they're engaging with the artisanal miners. And often at the moment, the data associated with trying to establish who's mining, where they come from, how many children they have, which company, town, all of that sort of data that often, organisations like Nike or Apple or whoever are using in some of their sort of public relations material, etc. A lot of the burden of collecting that information actually falls at the lowest common denominator, the artisanal miner and things. And so one of the ways that they're trying to drive increased wealth and increased sustainability of wealth for some of these smaller miners is actually that the end user pays back to that initial supplier a very small amount of money every time that they use that data. So it might be a cent or something every time they use that data, but because they use that data often, then it creates some revenue stream. So that model is being trialled currently in the DRC, associated with cobalt, to see whether that's a sort of a sustainable model. Yeah. Yeah. We can hear you, unfortunately everyone else can't. And then I think there's a gentleman at the back there as well.
Hello Michelle, John and Allan. My name is Jordan Lee from ACOM, Australia China Chamber of Mines and Minerals. Very good talk. My question is about another commodity, water. I mean, we'll talk about rocks, machines, people, diesel, everything else, chemicals. And water, maybe for some part of the mining process, is not that critical, but for some it is. Have you heard of any critical or very good practice cases or evidence that people are also monitoring use of water efficiency and what's the best way to water around the whole cycle? MMD has very good models around how to work around loaders and drag lines. But for water, what's your knowledge to share, please?
Yeah, so look, it's a very good point. I mean, I think all resources that we use are, we need to be mindful and we need to be very sort of cognizant of how much we're using and how we, lose or recycle that particular product. And look, the best examples that I know of are in areas where water is very scarce. And so in that sense, it is a very rare and scarce commodity. I think there's some great examples in parts of Tanzania, for example, that I'm privy to where, water is not only recycled, it gets cleaned up. There are some interesting technologies associated, rather than having to have big, very expensive RO plants, have, much cheaper cleaning of some of that water. Trying to make sure that you only introduce fresh water when you absolutely have to, and then monitoring that freshwater injection. So I think, and then other countries like Saudi Arabia, for example, also have some really interesting technologies associated with water monitoring and water cleanup and reuse. But I think it's a very, very good point that, we might monitor and really very, very specific around chemical usage and release. I think water will start becoming much more important, and it is in some countries that already have water scarcities.
Well, thanks, Jordan. Great question. And unfortunately, when we did the study of the 65 gold mines around the emissions intensity, the data for water consumption was not reported enough. Now, I'm no expert in that. I mean, one of the UN sustainability goals is around the water management. Clearly, if you're in the Atacama, I'm sure you get a lot more detail around the microliter or whatever it might be of consumption. And water's more, inverted commas, more important in some places than others. But it would have been fantastic if those data had been available for the 65 Australian gold mines, and unfortunately they weren't. So if there was a reporting standard there, that would really have helped the research. Similarly, in cyanide, we were unable to drill down sufficiently on an asset-by-asset basis to actually dig out those data.
That's interesting. That cyanide
Maybe we're just not good enough to try. We haven't been trying recently, but so far we couldn't get the data.
Yeah, no, but it's a very good point. Gentleman at the back.
Hi, Brendan Howard from Rio Tinto. Jonathan, on your story of seeking funding from the crowdfunding, I'm interested to understand more about if the behaviour and the expectations of those crowdfund investors differs from what a conventional investor would expect, having invested in your company.
it's, how do I put this delicately? I guess the traditional investor, there's a certain element of a Ponzi scheme in the junior exploration space. They get in at 10 cents a share before the company's listed. It lists at 20, maybe goes to 25, and they get out, doesn't matter. With crowdfunding, and it's hard because you're talking to the masses, it's hard to get to the individuals, but you're channeling a different energy there. Yes, everyone wants to make money, but these are mums and dads, probably less knowledgeable about how the system works. So there's a high level of trust, and it's beholden on us to make sure that they're protected as well. And that's where ASIC finds itself in a bit of a difficult place as well. So you're not dealing with sophisticated investors. So what's the expectations? It's hard to say, because it's not like sophisticated where you're having one-on-one with these high net worth people discussions. You're just pitching out to the crowd, and you don't necessarily get that much feedback. You get applause and that sort of thing. What are they thinking? It's somewhat intangible. So one of the things we tried to do in a pitch video is just not bore them with the technicalities of exploration, but really get down to the spirit of why we do what we do. And it comes down to being an adventurer, an explorer, and don't bamboozle them with the sciences of it. And that is something that the masses can appreciate. No, it's you're trying to be a bit like a Shackleton. That's really cool. I'll flick a bit of money your way.
So would it be true to say then that the crowdfunding investors are buying into the spirit of what you're trying to achieve, or that goal, as distinct from maybe the specifics of what you're trying to achieve?
So I guess that's how we were trying to communicate it to us, as we're going to go off and discover the Americas. So just it's really simple analogy stuff. It's like, okay, I get it now. That's what you're trying to achieve. You've got huge aspirational goals. You'll probably die along the way. Okay, that's fine. But if you come off, you've got the Americas. Let's be honest.
Not too sure what to do with that. Do not go and find the Americas, clearly. Any other questions?
Well, you've still got 3 minutes. You want to stick on the promotional video?
Yeah,
perhaps?
absolutely. That would be great, so we can see what the investors saw.
Yeah, why not? So I'm not sure how we do that. Is
Hopefully
down at the back of the room.
So a great segue to hopefully a 3-minute video on what did the crowdsourcing investors see.
There we go.
I became a geologist to become an explorer. Now I'd like you to come and explore with us. G'day, my name's John Bell. I'm the Managing Director of Greenfields Exploration. We're offering you the chance to invest in a new breed of mineral exploration. We call it the incubator model. Most exploration companies are fully committed to one asset. If they don't find anything, that's it for the company. If they do, the lean exploration company has to transform very quickly into a lumbering mine operator with all the complications that it brings. Adventurers become administrators, dreamers become middlemen, and the company loses its edge. The project incubator model is different because it lets us do what we do best. We will find new prospective areas, spend wisely to find out what minerals we have, and then team up with other companies who will take the project to the next stage, hopefully to an operating mine. We then move on to the next project to develop a portfolio of opportunities. The idea is to maximise the upside while reducing the risk.
For the project incubator model to work, firstly, you need projects. Our first project is something quite special. The Frontier project is almost 13,000 square kilometres of exploration licences in eastern Greenland. It's 20 times larger than the projects offered by the average Australian exploration company. It is a 3-for-1 play for copper, cobalt and nickel deposits. Essentially, it's almost the size of Northern Ireland and looks very good indeed. We plan to fly advanced sensing equipment over this region to gather data on locations with particularly high potential. According to the Danish and Greenlandic governments, the project is prospective for copper, cobalt and nickel, but has not been properly explored. A lot of the data available is 50 years out of date. They used hammers, we're using spectrometry, gravimetrics and lasers. We've done a lot of geological work to get us excited about this, and this, and our research has been independently verified. Please review our technical reports on Bill Folder to see why we're so excited.
Copper, cobalt and nickel are important because these are the minerals of the future. Government policy and new technology may lead to a huge growth in electric vehicles, high-spec electronics and household batteries. Copper, cobalt and nickel are essential for all of these applications, and there's already a huge global demand. Unfortunately, much of this demand is met by mines in unethical and unstable environments. By operating in Greenland, we aim to find a long-term source of these minerals to supply the future, which will operate... Greenland is honest, developed and liberal. We think it's a good place to work.
All with half the copper royalty rates of Western Australia and a favourable tax treatment.
These aren't just ambitious goals. We already hold the licences, and we're in discussions with governmental, academic and private entities. Our plan is externally validated, and all we need now is new investors to make this happen. We want you to come explore with us.
And after that, I'm sure you're all wanting to rush off and invest in Jonathan's next venture. And I think it's true to say that most probably these shareholders were buying into the dream as much as the reality of their projects. Well, look, we've run out of time, unfortunately, but I'd like to thank both Jonathan and Allan for taking the time to talk with us about different business models. And I'll hand over to everybody else.
Thank you.
Fantastic. Thank you.
Thank you, Michelle.